Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 18 of the Forex market review. Today we're going to take a look at USD pairs. We've got some upcoming non-farm payroll news which will definitely move the market. Let's go ahead and look at those charts. So here we are starting on the Aussie USD weekly time frame. So you can see up in the top left corner of my chart, we're on the Aussie USD, and we're starting on the weekly time frame just to see where we are at and where we may be going in a wave cycle pattern. So what we do first is we look for the largest AO, the very first largest AO, and we can identify that as wave 3. We then go to the beginning of wave 3, we drop in our Fibonacci retracement tool and we come all the way down to the end of wave 3, and we know where the end of wave 3 because as soon as it crosses back up the zero line right about there, we look left, find the lowest point in a down moving market. That's the end of wave 3 and follow it all the way back to the beginning, and that's roughly the beginning of wave 3. We can then go ahead and drop in some numbers in there just so we can identify the other waves. So here we have wave 1 moving back down. Then we have the wave 2, which is the pull back higher. Wave 2 pulls back roughly between 61.8% Fibonacci retracement, which it definitely has done there. We then have our next largest move lower, which is all of wave 3, and then we have our pullback for wave 4. So the pullback for wave 4 comes to roughly 38.2% minimum, but we like to see it come back to the 50% mark. So at the moment, if we just zoom out a little bit and look left, we can see some resistance around here. So we'll just go ahead, drop our horizontal tool, and we can see that it's very likely it's bounced here a few times, here a few times, and here. So it's very likely that it should reverse around this direction. Now normally we like to see an ABC cycle up, so we've probably done our move higher, having a bit of a pullback, and likely one more move back higher on a weekly time frame. So that's the wave 4 pullback. We'll just go ahead and delete all of those, drop down to the daily chart. So if this is the wave 4 pullback on the weekly, as we can see a large AO, so we know that's wave 3. Again, we grab our Fibonacci tool, we do it from roughly the beginning, which is around about this point here. So from the beginning of the chart all the way to the end of the chart. We then want to see the pullback of roughly 50%, and as we can see, if we look left, we can see some resistance areas. So definitely if you're looking at taking a long position in this one, you'd be looking at taking it around about these levels here, but you'd want to be waiting for confirmation which meets your trading strategy. So that's wave 3 move higher, and we're moving back lower for wave 4 on the daily chart. So hopefully what we want to see is this move back lower to see if it was justified. And we'll just go down to one time frame lower, just remove those indicators, and we can see some divergence. So as we have is a higher high in price, and we have the lower AO. So that is our divergence indicator, and so therefore that wave 3 move higher was confirmed ending at these levels here. We then had our pullback lower, push lower with that pushback higher. So if you got into the market and shorted around here, you probably could have had about 125 to 250. So you're risking one to make double the money. So definitely had a good risk to reward ratio there. We want to just step down to one more time frame lower. As you can see, a large AO, so it's probably going to move maybe a little bit lower before it goes back higher. And what we can see is a wave cycle pattern. And going along with the wave cycle patterns on this chart, we also have a bat pattern. So let me just go ahead and draw in that bat pattern for you. So we have the X to A to B, B to C, and then C to D. So this is pulled back right into resistance area looking left. Would have been a great opportunity to purchase it there. Have your stop losses up here, roughly around 50 pips. You might even want to go a bit higher, maybe even risking 100. And you would have exited somewhere down here. So with a exit of about 100 and 110 pips, you definitely would have risked 55 to make 110. And that big movement there, you would have just got straight into the trade and been very successful. And that happened to be the Aussie RBA announcement of dropping the interest rate from 2% to 1.75. So definitely would have been a very quick and great move, making 2 for 1. So let's jump across to the next chart. So what we're going to do here is now look at the USD Cad on a weekly time frame. So we've got USD Cad, and we can see this large move currently lower where the US has been weakening. So looking down at an AO, we can see the first large AO. So we know that's wave 3. So we come back to the beginning, roughly around here will be the start of wave 3. So we can roughly drop in some points. If we look left, we got our move up for wave 1. Then we got the pullback for wave 2. Then we have our push higher for wave 3. So this is on the weekly chart. All this move is wave 3. We then know it's the end of wave 3 because we wait till it comes back to the 0 line. When it's gone below the 0 line, we move our way up and look left and find the highest point this time because we're in an up channel. So from the start of wave 3 all the way up to the end of wave 3. And then we have our pullback for wave 4. And the wave 4, we like to see it to come to some resistance areas, but also around the 50% mark. So looking left, we can see some resistance, and these indicators are the dynamic support and resistance indicators. And if you're unable to identify support and resistance, then definitely go ahead to our website and you can purchase these indicators and they automatically draw them on for you. I've currently have them set for the daily time frame. So if I go to my indicators list, look up the DSR indicator, scroll down, it's set for 1440 minutes. And if you work that out, that's actually 24-hour period is 1440 minutes. If you're looking on a 1 hour chart, you'll just change that to 60 for 60 minutes. So that's a little bit about the DSR indicator. We've had our pullback to the 50% mark and we've hit support area. So for me, we look like we're going to be doing our final move back higher for a wave 5 on a weekly. So the USD Cad weekly time frame looking like we're moving back higher. And so what we want to do is just have a look at everything, delete these indicators, drop down one more time frame to see what we can see. And what we can see, this large move down here. So again, we know that's wave 3. We then go ahead, grab our indicator, go back to the beginning, roughly there. So we know it's probably 1, 2, down for 3. So roughly around about here. Doesn't have to be perfect, but we're looking for a push back higher now. So if you're looking to trade this higher, now is probably a good time. Looking left, we can see these support and resistance areas where green is support and red resistance. But where previously there was support, when we're below it, come back up, it then becomes a resistance area. So if you're looking left, there's roughly a channel in between these two areas here. And that's, as you can see, it's now bouncing in between there. So we need a good breakout of this support resistance area now. And then it's definitely going to be pushed back higher, but you wouldn't want to risk too much past these levels up here. So if we go ahead, drop down to a 4-hour chart just to see what's going on, and we can now see some divergence. So we have our lower low in price and our higher AO. So as the price went lower, we had the AO go higher. So from here to here, a lower low in price with a higher AO back to 0 line, so it's clear divergence. and we've also got this little hump here. Now this one's not clear on the 4 hour because it hasn't come back to zero line, but it's still a hump within a hump, which is higher. But if we were to drop down to the 1 hour chart and look at it, we can then see the lower low in price, and we can definitely see the AO dropping, and it's clear because it's coming back above the high-low line. There's zero line there. So we definitely want to look at different time frames and for this divergence. So it's good to see that divergence has occurred. So we definitely are moving back higher. Now, if you're looking for a breakout higher, some people would like to take it probably around these levels, putting stops down here, risking around 150 pips to make a couple hundred. So you could be in a trade there. I'd be looking for either some type of bat pattern or cipher pattern or a Gartley pattern or something on the 1 hour chart. So at the moment we have our push higher. So we've got the X to A leg, and then this will be the A to B leg. Now the B leg hasn't quite occurred yet, so we need to see that pullback. We then need to see it push back higher and then come back down to these levels down here, and where there'll be some support, and then we look at buying it, and we'll probably be risking maybe, you could probably risk maybe 50 pips and probably take 100 pips easy. So you can easy, or 60 for 120, easy risk one to make double. So you always want to risk less than what you want to make. That way you don't have to be as successful moving forward, and even having a 40% success rate will work out for you in the long run. So we'll just go ahead, delete these indicators. If you're looking at a daily time frame, we have a now push back higher. You're probably wanting to see if it can find some resistance around here, have a push back lower, and then a push back higher again, and with a breakthrough. But when you're looking for retest, you're probably looking around these levels here. So again, look left for support and resistance areas, or use the DSR indicator to help you out. Now, if you're on the 1 hour chart and you want to use the DSR indicator, obviously it's currently set up for the daily time frame. When it's installed, it's easy. You just edit it as we discussed. Go down, change the time frame to 60 minutes, with 60 minutes in an hour, and now you can see the support and resistance areas. So if I was looking to trade this one with some type of bat pattern, I would be expecting the pullback down to around these levels here. You can see there's a bit of a congestion period there. So if it came down to these levels in between here, you'd be looking at getting in. Obviously, your pullback, you're risking the initial pullback. Once the first pullback of the A to B leg has to come to the minimum of 38.2%, and then your entry is going to be roughly around the 78.6 to 88.6 area, and that's where you want to be getting in. So I hope you enjoyed week 18 of the Forex market review. That was the Aussie USD and the USD Cad, with the bat pattern on the Aussie USD 1 hour chart delivering quite quickly, with the interest rate drop from 2% to 1% by the Australian Reserve Bank and with the USD Cad and the US news coming out, the non-farm payrolls tomorrow or early Friday for it's Friday for Australian Eastern States times, then you definitely want to be checking out the US and looking for an opportunity to take that long or short, depending what you think the news might be. Okay, and go ahead to the training courses section on our website at www.saneinvestmentsolutions.com. Click on the DSR indicator, and you can go ahead and purchase that support and resistance area, which is by our affiliated partners, and it automatically draws in the support and resistance areas for you, so you don't have to worry about it. You can go through here, go all the way down, sign in, and take it from there. Okay, I wish you all the best in your success. Take care. Bye bye.